the Joe Luca Real Estate Show. I'm Joe Luca, and I'm your host every Tuesday evening right here in WNRI 99.9 on the FM dial, 1380 on the AM dial, and of course, streaming 24/7. You can check us out at WNRI.com. We are getting some beautiful weather. Yesterday afternoon wound up real nice, and today, the sunshine and the warmth, it really feels good. I do not want to hear anyone complaining about the heat or the sunshine because we have been waiting for it. And I'm eager to see all of the vegetation, the grass, the trees, the shrubs, the flowers, everything blooming into life. And it's a beautiful thing this spring. All right, so where are we? We're going to do a quick update, as we have been doing for the past few months, on the mortgage interest rate. So this week, mortgage interest rates, according to mortgagenewsdaily.com, 30-year fixed rate 6.61, 30-year FHA 6.14, 30-year VA 6.16. Now, those rates may sound high, and they certainly are higher than where they were just a short period of time ago. But compare those to last week, and if you're looking at the rates that we had last week, we're at 6.75, okay? And 30-year FHA and VA were 6.25 and 6.27. So we're lower than we were last week. That's a positive thing. Let's take the W and be happy with that. Oil, okay, going to Public New England Oil website, checking out A Star Oil. That's who I use for my oil deliveries. It's $4.29 per gallon of home heating oil, which is exactly the same as it was last week. So it hasn't gone up. I'm just so done with reading the news about the peace. Iran and U.S. are going to have a peace agreement. We're not. We're getting close. No, we're not. Yes, we are. We're going to bomb. No, we're not. Who's saying this? Who's saying that? I have come to the conclusion that no one in the media has any idea what they're talking about when it comes to the war in Iran. So we just have to sit and wait, hope for the best, expect the worst, and take what comes, because in the final analysis, we don't have any control. But what we do have control over is home ownership. And I want to talk tonight about some hidden financial risks of home ownership in 2026 and how smart homeowners can protect themselves. One of the things we're going to touch upon is insurance. And speaking of insurance, everyone needs to be aware. If you have or think you may have a claim against your homeowner's policy, you need to give Vern Rainville a call at 484-300-8495. Yes, that's Vern Rainville. He returns all phone calls within 24 hours. Vern Rainville is licensed by the state of Rhode Island to be a public insurance adjuster. But all you have to do is give him a call at 484-300-8495. Again, 484-300-8495. That's Vern Rainville. All calls returned within 24 hours. He's a Rhode Island guy, and you will not regret giving him a call. Okay, he's honest. He'll let you know what he can do for you, or if he can't help you, he'll let you know up front. He won't waste your time. All right, so tonight, welcome everyone. Thank you for tuning in. I'm Joe Luca, Realtor, and every week, what I try to do is help consumers make smarter decisions when it comes to buying, selling, financing, and protecting real estate. Okay. Now, tonight's topic is one that affects almost everyone listening. As I said earlier, it's the hidden financial risks of homeownership in 2026 and how smart homeowners can protect themselves. Now, before anybody panics, let me be very clear, abundantly clear. This is not a doom and gloom show. This is a reality show, okay? And I try to base everything on real data. I still firmly believe homeownership remains excuse me, one of the best long-term wealth-building tools available to ordinary Americans like you and me. We are incredibly fortunate to live in a country where homeownership is still achievable for millions of people. Just a quick data point. Last year, we sold, depending on where you get your numbers, about 4.5 million homes. Last time we sold that low a number of homes, we had to go back to the 1990s to get a number lower than that. Okay. So it's been a long time. And for perspective, before COVID, that number was over 6.5 million. Okay. So even with the fewer number of transactions happening, we're still selling over 4 million homes per year. Okay. So that is a fantastic thing. And when you look at first-time home buyers, believe it or not, the percentage of first-time home buyers has crept up 1 point from the year before. But owning a home today is very different than it was even 5 years ago. The costs are changing. The risks are changing. Insurance is changing. Maintenance costs are changing. And interest rates are different. And how these things have changed or are different is everything is higher. Many homeowners are discovering that there are expenses and there are liabilities that they never anticipated. So tonight we're going to discuss some hidden ownership costs, mistakes that both buyers and sellers make, insurance and maintenance surprises, the Rhode Island housing market, and whether people should sell now or wait. And lastly, how real estate still creates wealth during times of uncertainty. And most importantly, folks, we're going to talk about how smart homeowners protect themselves financially. Okay, so those are the things that we're going to cover tonight. Now, one of the biggest misconceptions about real estate is this: if I can afford the mortgage payment, I can afford the house. Unfortunately, folks, that's simply not always true. Why? Because the mortgage payment is only one part of the ownership equation. First, what you need to think about is insurance. Insurance costs have increased dramatically nationwide. People say, oh, well, that's just in the coastal areas. No, nationwide. Many homeowners are shocked when they realize that premiums rise, and sometimes significantly. Deductibles increase, coverage becomes harder to obtain, and flood insurance requirements appear unexpectedly. And in coastal areas like Rhode Island and Massachusetts, these issues can matter even more. Next, the cost of deferred maintenance. Small maintenance problems can become big, expensive problems. We've talked about this before on the show. Roof issues, chimneys, water intrusion, old heating systems, aging oil tanks, electrical updates, foundation cracks. I tell people all the time, houses reward maintenance and punish neglect. And when I'm walking around a house with a buyer, I point out that a well-maintained home is like money in the bank. Actually, it's like money in the bank that you forgot you had, because you'd only appreciate it when you start to do some work in the house and realize that there aren't going to be any surprises. Whereas if you bought a house that had deferred maintenance and you start to do some work, it's the opposite. You think you had that pot of gold and you don't have anything. So stay on top of deferred maintenance. One of the great ways to do this, folks, walk around the house with a cup of coffee or a beer or whatever and just observe. If anything's changed, if it looks like it's not right, jump on it right away. Check your downspouts. Make sure they're connected to the gutters. Make sure the water's directed at least 4 feet away from the house. Trees. This is something that surprises people, okay? You need to really make sure that trees too close to the home are not, or that trees are not too close to the home. That's what I wanted to say, because they can damage foundations. The roots can penetrate. They can work their way through foundations. They can clog sewer lines if they crunch through those sewer drain pipes. They can threaten roofs. Okay, branches rubbing along the shingles. Of course, limbs can fall on the roof, and it can increase insurance concerns, because insurance companies, they look for, here air quotes folks, potential liabilities. And if there's a potential liability, guess what? You're going to pay more for it on your insurance. Beautiful landscaping, if not maintained properly and not designed properly, can become a major financial liability. Next, you want to look at energy costs. Okay, we're coming into the summer season. Electric rates are up like crazy. We came out of a crazy winter with a blizzard and lots of wind and snow, and oil. Price of oil was higher. So you need to be concerned with energy costs. How much are you spending on oil, electricity, water? Okay, if you have that toilet that never stops running, that's costing you money. Unless, of course, you have a well. But if you're paying for water, you want to make sure you don't have any dripping faucets or toilets that run. Because if you're paying for water and you're paying for sewer, your sewer bill is based on how much water you use. So your water bill goes up, your sewer bill goes up. So you need to pay attention to those and make sure everything is functioning as it's supposed to be functioning. Because these costs add up quickly, believe me. People often focus on what's the mortgage payment going to be for this house, instead of what's the real monthly ownership cost. Okay, when I'm reviewing the cost of ownership with my clients, if there is a home that's on a septic system and has a well, and they've both been well maintained, all right, that's money you don't have to spend every month on a water and sewer bill. But you're going to have an annual expense to maintain your septic system, and there will be a periodic expense to maintain your well pump. So a mistake that people frequently make is shopping based on the maximum approval amount. I just had this conversation with a buyer before I left the office tonight. Just because a lender approves someone for a certain amount does not mean they should spend all the way up to that amount. Smart buyers, which hopefully my buyers are, leave room for maintenance, leave room for emergencies, leave room for rising taxes, increases in insurance, and lifestyle flexibility. You don't want to be chained to your home so that you cannot do anything. Mistake number 2 is ignoring inspection issues. A home inspection is one of those things, it's information. And you get a lot of information, and it's not necessarily whether you should or should not buy the home, or whether you should or should not renegotiate the price. It's more about information on how you're going to have to conduct yourself as a homeowner of this specific property. They'll let you know roughly how old the roof is, what the deal is with the furnace or the HVAC system. Working fine now, it's 30 years old, you may need to pay attention to it. You're going to have your oil-fired boiler inspected every year, gas-fired boiler every other year. You need to pay attention to issues that come up during the home inspection. If they say, oh, the bulkhead is, water's penetrating and it's coming in and it's going to eventually rot the stairs going down from the bulkhead, pay attention to that. After you own the home, put together a schedule, everything you should do on a certain time frame. Because these things can be very problematic and financially devastating if you ignore warning signs. So again, a home inspection is not designed to kill deals or renegotiate deals. It's designed to inform buyers of what they are going to have to do during the time they own the home. Now in New England, especially here in Rhode Island, we have a lot of older homes. We have some of the oldest housing stock in the country. Many of these homes are beautiful older homes, but older homes can have their own set of issues. My house was, at least parts of it, were built in 1800. That's 226 years old. It's kind of weird thinking that how old this house is. Older homes may have knob and tube wiring, outdated plumbing, insulation issues or no insulation at all, foundation concerns, underground oil tanks. Okay, I always say, think back to the house I grew up in. We had a 1,000-gallon underground oil tank. We sold the house in the 1980s. No one even paid attention to that back then. No one kept track of it. So we sold it to someone who bought it. They didn't know anything about it. They sold it to someone else, and who sold it to someone else. And I have no idea if the people who own the house now know that there's an unused oil tank on the property. Maybe it was taken out at some point. But nowadays, you need to be aware of this. Underground oil tanks can be expensive to remove. They can be a potential hazard if they leak. None of these things can kill a deal, but buyers need to be educated and need to have realistic expectations. Note to current homeowners and sellers, if any of these things apply to your home, you may want to address them before you put your house on the market. Because if the buyer has a good agent, they're all going to come up. Okay. Mistake number 4, focusing only on interest rates. Now, this is so important now because rates are so much higher than they were before. And I start the show off, I know, talking about interest rates, but that's just for perspective. So rates are lower today than they were last Tuesday, but they are higher than they were several Tuesdays before that. People can become obsessed with interest rates. But folks, historically speaking, people stay in the house much longer than they hold on to the mortgage, because when rates drop, you can refinance. It's the marry the house, date the rate. Rates always change. They just changed a quarter of a point in 7 days. Buying the wrong house or not buying a house can affect someone for decades. People say, well, I'm going to wait till prices come down. It's like, folks, I don't have a crystal ball, but I'll tell you what, based on the data that's out there, and incomes are rising, and the number of buyers who are looking to buy homes, and the number of young people that are coming out and going to be ready to create new homes, that number is not diminishing. So that's going to put more pressure on the limited inventory that we have, because even if we started building homes today as fast as we could, it would still take us 10 years to build ourselves out of this shortfall. Now, let's discuss sellers for a minute. Overpricing. This is still one of the biggest mistakes. Some sellers believe if inventory is low, I can ask anything. No, that's not true. Even in low inventory markets, buyers still compare value. Overpriced homes are going to sit on the market longer, become stale, attract low offers, and sometimes they create suspicion like, what's going on? Is there deferred maintenance? Sometimes homeowners stop noticing problems because they live with them. They're so used to there being moisture in the basement. You get used to the stained ceiling, peeling paint, all the clutter around your house, in your yard, the worn out flooring, odors, like I said, pet odors, dampness odors, mildew, mold, overgrown landscaping. Having beautifully designed landscaping is great, but you need to maintain it so it doesn't get ahead of you. This past week we had, nice weather more or less last week, and then on the weekend, Saturday and Sunday, it rained. That's typically when I go and I mow my lawn. And if you can't get it done when you have time off, what happens? The grass grows that much more quickly. And luckily, I was able to squeeze in a few hours on Thursday night and Friday night because I knew it was going to rain Saturday and Sunday. And then on Monday, there was one little piece that I still hadn't got it done. But if I hadn't, by this coming weekend, my grass would be a foot long because of all the rain we had and all the sunshine we're getting. These things, that's just my lawn. When you have shrubs that are like, months, years of neglect, this stuff can affect perceived value tremendously. Bad presentation, okay? Consumers shop online first. That's why I always encourage the use of a professional photographer. Lighting matters, photography matters, cleanliness matters, and first impressions matter more than ever. Now, talking about hiring the right agent, there's the old saying, you get what you pay for, okay? Why do these towels cost so much more than those towels? Well, they probably dry you better and will last longer. That's why these bath towels are more expensive than those bath towels. Why are these, why is this flatware more expensive than this, flatware? Well, probably not as fragile. It's not going to break as easily or bend. Same thing is true with a real estate agent. If you're shopping for a real estate agent solely based on the commission, their compensation, or that they're a friend or a family member, or they were making unrealistic promises, you may want to re-examine your strategy. Because the right agent for you, whether you're buying or selling, whether you're a first time or 17th time buying or selling, the agent should educate you, communicate well with you, protect you, negotiate on your behalf. Okay, you need to be a skilled negotiator. Market effectively. That means using print, radio, social media, internet, email. Okay. And, of course, tell the truth. Not just say what people want to hear. Okay. Now, what's really happening in the Rhode Island market? Local conditions. So despite national headlines, the market in Rhode Island remains relatively constrained from an inventory standpoint. We still don't have enough homes available relative to buyer demand. That's important because inventory levels are still driving pricing pressure. Okay? And again, folks, The median price of a single-family home is increasing at double-digit rates. Double-digit rates. So waiting is not an option. Simple economics. If there are many buyers and few homes, prices tend to remain stable or increase, and they're increasing. Now, if inventory were to suddenly surge, pricing pressure is going to change. But right now in Little Rhodey and in Massachusetts, inventory remains tight historically. Affordability is still an issue. That's the biggest challenge today, the affordability. Of course, that's directly related to demand because more demand pushes prices higher, which makes it harder to afford a home. Higher prices, higher taxes, higher insurance, higher utilities, higher maintenance costs, all affect purchasing power. Those are the things that will eat you alive after you own the house. Okay, taxes going up, insurance going up, the utilities going up, water bills, sewer bills, electric rates, heating and cooling charges, and maintenance costs. Everything is so expensive. You go to one of the big box supply stores, everything is expensive. Okay, that all affect purchasing power. All of those affect the purchasing power because they cost more, so now you have less that you can spend. Now, why does real estate still matter? Why is it important? Why should you bother trying to buy a home? Even with challenges, real estate is still one of the primary ways ordinary families, ordinary individuals like you and me, build long-term wealth. And you can do it in a multiple of ways through equity accumulation, okay, paying down your mortgage, appreciation, the value of homes just going up because there are only so many of them out there, leverage, you put 5% down, finance 95%, the whole value increases, so you're benefiting from the value of a 100% increase even though you only put 3.5, 5, 10, 20% down. And your housing cost, the cost of keeping shelter over your head, is fixed over time. So if you buy a house today at, what did I say, 6.61%, and you never refinance it, your monthly payment for mortgage and interest is the same for 30 years. Where else are you going to go and get a payment that's the same for 30 years? A car won't even last 30 years, even if you could finance it that long, which of course you wouldn't want to. So those are some of the benefits. Now, I want to do a quick shout out again to Vern Rainville, public insurance adjuster, licensed by the state of Rhode Island, 484-300-8495. Give him a call. All calls are returned within 24 hours if you think or if you have a claim against your homeowner's insurance policy. That's Vern Rainville, 484-300-8495. Folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM, 1380 on the AM dial, and of course streaming at WNRI.com. That's 24/7. All right, so should people sell now or should they wait? This is one of the most common questions that people ask. And the answer depends on a few things. Your finances. Okay, where are you in your life? Are you in the first home you purchased, the family's growing? Are you in the second home you purchased and the family's getting smaller? Are you in the second, third, or fourth home you purchased and you're ready to downsize and transition into another part of life? Or do you have that second home, that vacation home, maybe down in Narragansett, maybe it's in Florida, and you just don't have the time or the energy or the desire to go there, or you want to go there more and stay here less? These are the questions that need to be asked to determine whether it's a good time to sell based on your finances, your goals, sometimes your health. You live in a colonial, the bedrooms and bathroom are upstairs, the half bath is downstairs, can't do the stairs anymore. Health issues may determine you need to either spend some money to convert the first floor or sell that house and buy something else. Lifestyle. Okay, maybe no one lives around here anymore. Your kids moved away. Maybe you want to move closer to them in South Carolina, Florida, wherever they are, Texas. Maybe you can't deal with the cold weather anymore. Or you can't deal with the alligators down in Florida anymore and you want to come back up here. And then family needs. Children, grandchildren are sometimes coming back home to take care of mom and dad or grandma and grandpa. Those are things that need to be evaluated. Now, some reasons that people should consider selling. Okay, your home's too large. Maintenance is just becoming overwhelming. If you can't manage cutting the grass, dealing with the ice on the stairs in the winter. House is too big to vacuum and dust. Can't do stairs, as I mentioned. You want to lower your expenses. You're living in a 3,200 square foot colonial. You only use the kitchen, the bedroom, and the TV room, whatever that is. You don't need the expenses of a big house. You could live in a 1,000 square foot or 800 square foot house or condo. Maybe you want to relocate. Maybe the neighborhood you're living in changed and it just doesn't fit anymore for one reason or another. Maybe you need to relocate to a different neighborhood. Or you want to start doing some retirement planning. Maybe going into a 55 plus community or an assisted living situation. Those are some reasons you should look at to sell. Now, what are some reasons why you should stay? You've got a 2.75 mortgage rate. None of the above issues are a problem. You should probably stay. Strong emotional attachment. Sometimes people can't separate, this is where the kids grew up and whatever. All those emotional attachment reasons. If you can't separate that, maybe you should stay. As long as none of the above reasons that we went over apply. Tax advantages. Maybe there are tax advantages to staying where you are. And of course, it's a stable situation, financially and otherwise, because it's a known quantity. Okay? My mortgage is paid off. I know I only have to pay this for taxes, this for utilities, this for maintenance. I can afford that from my Social Security, my pension, my savings, whatever it is. But what happens if you wait too long? Waiting for perfect rates, perfect prices, perfect timing. Folks, we live in a very imperfect world, so perfect timing rarely exists. Usually it's serendipity if something like that occurs. Smart decisions are usually based on long-term goals, realistic planning, risk reduction, not emotional headlines. Well, Joe, look, I'm 75 years old. What kind of long-term planning am I supposed to do? Well, what do you want to do? Short-term planning and only plan for the next 12 months? You don't know what's going to happen in 13, 14, 15 months. Maybe something happens and then you have to move. You can't do stairs anymore at all. Stay ahead of the curve. Come to the reality. My life is changing. I'm getting older. I'm not the same as I was. I'm dealing with this now. I'm not the same as I was when I was 25, 30, 35. So I have to look at life differently now. You have to plan differently. You do not want to follow or chase or react to the headlines or what some talking head says on a stock television show, something that reviews the financial markets. They usually don't know what they're talking about. And even when they bring on some real estate talking head, most of the time they're good, but not all of the time, because sometimes there's one channel that has this woman come on. She always talks about real estate and she always gets it wrong. It drives me insane. Sometimes they'll bring in a top-notch realtor and they get it right. Folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM, 1380 on the AM dial. We are here every Tuesday evening, 6 to 7 o'clock p.m. Check us out on WNRI.com. I actually record this show and put it on my YouTube channel, Rhode Island Real Estate with Joe Luca, so you can always check it out there as well. I have a lot of other content on there as well. I also have a blog called cupofjoeluca.com. That's cupofjoeluca.com, and I try to put some regular information out on there as well. Many times you'll kind of see a theme between what I talk about here, what's on the blog, and maybe some other videos that I put on the YouTube channel. And then I also have a presence on LinkedIn, where we talk about family law issues. We talk about, elder care, things like that. And then, divorce and real estate. So there are a lot of things. We've got a lot of content out there for you. So if you just look for Joe Luca Realtor, you should be able to find me online in multiple places. I'm on Facebook, Instagram, TikTok, LinkedIn, Twitter. And I try to put content on all of those. So please check it out. And if you go to my YouTube channel, Rhode Island Real Estate with Joe Luca, like the videos and subscribe to the channel, please, because, you'll get updates when I put other things on there. All right, so how does real estate still build wealth despite uncertainty? Real estate remains incredibly powerful. I'm going to say that again. Despite all of this, real estate remains incredibly powerful. Why? Because of leverage. Leverage, leverage, leverage. People can control a large asset with a relatively small down payment. Excuse me. You can control $100,000 for every $5,000 you put down. That's a 5% down payment. Let's say you put 10% down. So you can control for every $100,000 of value, you only have to put in $10,000. So if the property value goes up 3% per year, you made a $3,000 return on a $10,000 investment. That's a 30% return. That is the beauty of leverage. Appreciation. Historically, quality real estate tends to appreciate over long periods. Even when you factor in major downturns like we had in 2007, 8, 9, 10, 11, 12, real estate is still a positive, net positive. It's for savings because every mortgage payment reduces your principal amount over time. Even if it's only a few pennies every month, over time, that increases your net worth. And then, of course, as I mentioned earlier, stability. Fixed rate mortgages provide predictability. And that's why I say, folks, even if you're like 65, 70 years old, if you buy a home with a 30-year mortgage, that mortgage may outlive you. But one thing that you can benefit from is your principal and interest payment is not going to change. Whereas if you were paying rent somewhere, I guarantee you every year the cost to keep a roof over your head would increase. Okay? So it offers predictability. Also, there are some tax benefits. Depending on circumstances, there are deductions, there are exclusions, there are investment opportunities. Some of these can exist for you. Because in the final analysis, folks, home ownership is bigger than just the money. For many families, home ownership provides stability, pride, security, community, and legacy. And folks, there's a lot of data out there that supports the claim that families that own their own home, the kids in the aggregate do better in school because there's that stability. They're not moving. When you're renting, those tenant families move more frequently than home ownership families. In general, I know there are some folks who own homes and jobs or military make you move 3, 4, 5 times in 15 years. But generally speaking, that's not the case. Now, as many of you know, I'm president of the National Association of Hispanic Real Estate Professionals, the Providence chapter. And I just wanted to say a quick point about that. With Hispanic home ownership conversations nationwide, we continue to see how real estate creates generational wealth and opportunity. The Hispanic homeowner, that demographic, that niche, is growing fastest out of all of the other demographics. Yes, even the Caucasians. Okay. I find it very inspiring to participate in, support, and work with the Hispanic community and helping them buy homes and working with my colleagues to provide outreach to the community. Again, folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM, 1380 AM, and streaming at WNRI.com. You can also catch this show on my YouTube channel, Rhode Island Real Estate with Joe Luca, as well as a lot of other content on there, everything from little 30-second videos to 3 to 5 minute videos. I have a few hundred videos on there. Folks, the smartest homeowners are not necessarily the richest homeowners. The smartest homeowners are the most informed, because you can have millionaire homeowners that still make mistakes, and their mistakes involve a lot more money because they may not be well informed. So smart homeowners maintain their property, prepare financially, they think long term, avoid emotional decision making, and ask questions. If it could be something as simple as, geez, why are these shrubs, why are these bushes, why are these trees dying? That might indicate something else is going on. Oh, maybe those trees are dying because they're infested with wood-boring insects which could migrate to your home, or maybe are dropping on your home. Why am I getting all these new sprouts, these new trees growing over here? Well, maybe that has something about water management issues. If it's something you're unsure of, seek professional guidance. You can try to, we're now with the advent of AI, we have access to answers we didn't have before. I can't count the number of times I walk around my yard and I see something. It's like, what kind of a plant is this? And I take a picture of it and send it up to AI, and I get an answer. Is that invasive or is that native to Rhode Island? So ask questions, engage, be involved with your property, with your home. And when necessary, seek professional guidance. Call a plumber, a licensed electrician, a roofing person. Okay, one of our, John the roofer. If you have any questions or needs like that, give me a call. My office number is 401-409-5030. Text me, 401-409-5030, and I'll get right back to you. And folks, most importantly, smart homeowners understand that a home is both a place to live that provides shelter and a financial asset that needs protection. Okay? Financial asset that needs protection. So we've been talking for about the past 50 minutes or so about some of the hidden expenses of home ownership. And I like to point things out like this because, of course, I'm a realtor. My job is to help people buy and sell homes. And I always talk about how I want my clients to make a smart real estate decision. Sometimes a smart real estate decision is not to buy a particular house. Or maybe the smart decision is not to sell your house at this point in your life. Or maybe the smart decision is this buyer should buy house 1, 2, 3. But that buyer, it's not a good fit for him or her. Everyone's situation is different. I showed a house in Warwick a few weeks ago to one buyer, and it's an okay house. It has some challenges, has some deferred maintenance issues. But my buyer, even though they have the skill set to do that, that's not what they're looking for. So when they said, Joe, we don't think we want to pursue this one, I was kind of happy with that for them. I had another buyer who was like, hey, Joe, do you have any homes that may, need some work that I could get into? And they happened to ask about that one. That would have been a great house for this person because that's what they were looking to do. They were looking for an opportunity to add value to a house. Okay, their situation, their financial situation was a little bit different. A lot of times, be careful what you ask because the answer may not be what you want to hear. If people, Joe, show me some foreclosed homes in Rhode Island. Okay, maybe we have 7 of them now, 8 of them. If I send you a foreclosed home for $700,000, it's worth 1.5. It's a tremendous value. Is that anything that most people can deal with? No. Okay, no, it's not. We don't have a lot of foreclosed homes in Rhode Island right now. So people that are just looking for a foreclosed home, it's not necessarily a good question to ask. The question to ask would be, what is the best home or homes that are available for my situation? What you can afford. Now, I've had people say, Joe, I want to buy a foreclosed home for cash. How much money do you have? Well, I have $30,000, but I can get another 40. Okay, you're about 15 years too late because those prices are long gone. How about if we put together a plan to get you ready so you can qualify for a mortgage so that you can buy something that makes sense? Okay. So, folks, there are right now about 1,057 single-family homes for sale in Rhode Island. We have 7 that are foreclosed. Okay, so what is that? 0.7%. Of all the homes that are for sale, less than 1% are foreclosed. Okay, the cheapest one is $189,000. It's in Pawtucket. And I will guarantee you, yep, this is an investor special. That's why it's priced so low. The next lowest one is $295,000. That's here in Woonsocket. Let's see. This is an interesting one. It has 9 bedrooms. So this has been on the market for almost a year. And the reason is it's being sold as is, no seller disclosures. Okay, so that's why it's been on the market for a year, and no one's bought it, even though it's foreclosed. Next one is $300,000. This has been on the market for 209 days, also being sold as is. Someone's living there. You can't even walk on the property to look at it. Never mind get inside. That's not going to sell soon. And then you go up to a $312,000 property. This looks like an okay house, but the reason it hasn't sold in 3 months is that the buyer has to assume open building permits. That means work that was started but wasn't completed. So there are reasons that these homes have not sold. Another house, $339,000 in East Providence. Right, this is going to be going under agreement. It says highest and best were already due. Maybe not, because they were due on the 19th, and it's still on the market. Then we have a property for $385,000 in Warwick. This is a very looks like a nice little property. No showings. Can't even look at the property. Can't even walk on the property. Then another property for $539,000 in Cranston. So these are the foreclosed properties, folks. Be careful what you ask for, because what it was, 3 of them you can't even go on the property to look at them. Some of them need too much work, and the other ones we don't know. Folks, I want to thank you for tuning in to the Joe Luca Real Estate Show. We will be back next week, same bat time, same bat channel. Check us out. Next up is Rick Mernier and the Old Time Preaching Ministry for some good Bible scripture. So stay tuned. We will be back next week. Thanks for tuning in. Bye-bye. So when you're ready to buy yourself, call Luca. Thanks for tuning in, guys.